Hello everyone! You should have already learned the futures concept and practiced a bit on the exchanges before starting the current lesson. I try to tell the information in simple words. I use minimal terminology especially to provide everyone, regardless of knowledge level, with a chance to understand everything. Please, note that the current lesson contains basic knowledge only, which should be then expanded for successful independent trading. Within the first part of the current lesson, we are going to analyze the way it works with the deposit, the amounts to be entered in the trades, forecast operation way, and what to do if the forecast doesn't come true and the price moves to liquidation. Within the second part, we are going to look through all the main mistakes often made by a novice trader. I will tell you about the way to avoid losing your entire deposit by working on signals, and you will realize the discipline importance in our trade and emotions danger as well. Note that you risk to lose your deposit and will not be able to earn on futures while using our signals stably for a long time without following some trading rules. Therefore, we are sure that the current lesson is the most important in our course. That's why I ask you to be as much careful as possible. So, let's start the first part. It is a commonly known fact that futures trading is a profitable job, but the reward is commensurate with the risk, like anywhere. You may see the trades which bring 20% profit, 50% and even 100% while watching the work on our channel, so it is important to realize the following. The loss risk is commensurate with the income. If we have earned 100% of the trade, we risk to lose 100% within the trade too. No one, neither a signal analyst nor analyst group, will be able to predict future market states of affairs. We may analyze and get just the movement probability. Forecasts come true by 70 and 80%. According to statistics, 3 out of 4 trades will bring profit. 1 of 4 trades will bring loss. For example, you may have all trades bringing a profit for all week, but then you may have losses on all trades. Such probability is calculated over a long operation period. Now we fix the first rule. Profits equals risks. We regularly analyze the market in multiple trades. Leverage increases profits. The better the analytics, the higher probability to get successful trades. So, you need to be able to properly manage your capital in order to earn money here. You need to enter trades while using just a small part of the deposit. 5% of your total deposit is the maximum recommended amount. 5% of $1,000 will be $50 if your deposit is $1,000. Sometimes there are increased risk trades, so please carefully read our trading recommendations. We recommend entering 1%, 2 or 3% of your deposit in such trades. The amounts will be sufficient to get a good profit given the leverage. You can see how we withdraw 10% by 20% on the company's channel, but the profit will be 1% or 2% at the end of the day. I'll tell more detail about its calculation way. For example, the total balance is $1,000. We bet 5% of the $50 deposit and took X5 leverage. Total the amount of $250 works for us. The signal worked and the profit was 50%. $25 of 1,000 was 2.5%. So, this is the simplest example because everything is more complicated really in real life and all depends on multiple factors. Now please remember the second rule. We spend 1, 2, 3, 4 or 5% of the total deposit to enter any trade. So, we don't spend more, neither 10% nor 20%, let alone your entire deposit. Otherwise, all the work will turn into lottery and you will have a huge risk of losing the whole deposit. So, we figured out the amounts, bet the recommended percentage of the deposit in the trades and avoid taking large leverage. For beginners, no more than 5, the larger the leverage, the closer the margin call. So, let's remember the theory. Now, let's define stop-loss value, the price at which our trade will close in the red. So, you should already be aware of the way and place in its install. So, let's look. I switched to Binance Exchange and made a long trade. Now I will put a stop-loss. So, now we can see my account. We have already got a trading contract for Bitcoin. I put long. Now, let's open the stop-loss and take profit menu. I put $50 on the trade. Took the leverage, claimed 5. Now I need to enter the amount which my contract is liquidated at. Please note that my leverage is X5. It is recommended for novice traders to take no more than 5 leverage. The recommended stop loss for the leverage equal to 5. Choose so that your loss to be no more than 20 or 30% of the trade amount upon liquidation. My $50, the margin. If I put the amount of $50 in a trade, then the loss should be no more than $10 or $15, no more than 20% or 30%. I print the amount required while using the selection method. I'm trying various options. Here I picked up an option, within which the loss from the trade will be approximately 20% in the event of an incorrect forecast. In general, the stop-loss choice depends on multiple factors. There are drawn support and resistance lines. The chart and the market are analyzed in general. You will learn this when you trade at an advanced level. But for now, try to follow our recommendations. Remember the third rule. Now set the stop-loss, so that the loss percentage to be no more than 20 or 30% of the margin, provided that the leverage is no more than 5. So, we figure out the stop-loss. Now I will tell you about a position averaging, the reason it's required and its operation way. Our trading recommendations often do not work immediately. Setting a signal does not mean that it will immediately begin to move within the direction we need. Sometimes this takes certain time. Trade can be open for several hours, days, or even all month. Some trades reports from the channel are published in a few days. This means that they work much later. So, let's imagine the following situation. You set a signal, choose the right amount, set a stop loss and goes. You made everything right according to our recommendations. But suddenly, the signal hung. The price moved neither up nor down. Flat market means that the market does not move and is approximately in the same price range. The trade just hung. We do not touch the trade in such a case, because we understand that it takes certain time to work out. The next situation is when the market starts to favorish. It moves up and down in large volumes. So, our trade is starting to move towards the liquidation price. In such a case, we ensure and average transactions. We are sure that the price will start moving within the required direction. Please note that it's actual for the case if we are sure that the price will start moving within the required direction. Once again. Often it's recommended to keep the liquidation price the same and avoid averaging positions. Let the trade close in the red. We'll come to terms with the loss and wait for the market to calm down. It is allowed to trade in the flat market, but this requires applying the strategy called scalping. We will definitely go through a scalping lesson in future when we start the advanced course part. When the trade moves to the liquidation price and we're 90% sure of the forecast, we average it. Trade averaging means opening the same trade in the same position, but the entry is one level lower or higher, depending on the contract. We create a new trade with a marked price below the previous entry level if having long working for us. The entry price for the first contract will just shift, it will average out. When we open the same contract at a lower price, the liquidation price will move and we will have the only contract as well. So, if we have a short open, then we set the price higher than the previous entry. Trades will be relatively safe. Perhaps they will bring us profit. We do this exclusively when being confident in our forecast. If we are not confident, we must come to terms with our losses by closing the trade at a loss without averaging it, when we will start for the market to decide on the movement. It is required to both understand and realize the following. If we make a mistake, we will lose much more by averaging the trade. It is possible to average trades indefinitely just by draining and spending deposit while hoping for getting a profit. But in 80% of cases, it is better to accept the loss and move on. The entry price for averaging depends on a particular situation. Traders always analyze the market and then draw support and resistance lines. The averaging price is usually chosen depending on the current lines. Lots of people are engaged in trading in our group, and we advise people regarding all the issues they are interested in. So you may always ask for advice in our chat regarding averaging a trade as well as what price to choose or avoid touching it at all. Rarely it may happen that the advice provided by our group may be wrong. Neither trader nor analyst group are able to fully predict where the market will go. So, let's summarize and fix the fourth rule. It is required to average trades only when being confident in the forecast. Be sure to consult with us in chat and close the trade in the negative and move on, if there is everyone doubts. So, we figure out the amount to bet in the trade as well as a place and time for them to be averaged. Currently, we're aware of the fact that signals pass approximately 2 out of 3 or 3 out of 4, sometimes they work out with a particular delay. Besides, we have learned the way to average trades. We must learn one more rule before proceeding the second part. It is required to carefully verify each place, selling both analytics and signals for a long time. There are hundreds of both free and paid groups which promote their trading recommendations. Most groups, in 90% of cases, just copy information from each other. Therefore, their analytics is not effective at all. So, you may easily lose part of your deposit by listening to advice from unverified places. Rather often such groups just build their reputation and subscribers in this way. Besides, there are groups where you can buy analytics just for a fee. Such groups usually have got twisted reviews, and you will not see signals from this group in advance. They just demonstrate the fruitful work type, while in fact being engaged in fruit. People often buy analytics by fall into the red. Please pay close attention to the advice provided in our chat. We have got a lot of people and everyone likes to share own opinion. Sometimes newbies may see a message from someone who is not adept in trading and take this advice seriously. Our professional and experienced traders send our analytics through our representatives in the chat. You will recognize them by their names. So, it will be written Trader Income and Trader Income 2. For newcomers, I recommend taking signals just from our channel. You'll learn to analyze and verify the places where they share their analytics once you become adept in trading. So, let's switch to the next part of our tutorial. In the next part, I'm going to talk about the main mistakes often made by a novice investor makes. We will analyze several cases made by those involved in trading. Now, let's switch to the second part of our video tutorial. So, now we're going to analyze the main mistakes often made by a novice trader within this part. I will explain discipline importance and emotions danger. So, let's start. The main mistakes made by all novice traders are caused by a person's tendency to be controlled by emotions instead of a cold head. So, you get a huge risk of losing the entire deposit if being controlled by your emotions. Rather often our emotions turn on when either we earn a lot or when we lose a lot. So, that's why it is extremely important to treat income or loss as sometimes ordinary, being detached. For example, today we have earned a lot, and it's great. The next day we lost a lot. Nothing terrible happened either. You shouldn't be worried much about that. There are some common cases causing certain emotions once being met. I will talk about some of them. The first case is when you start averaging out losing trades endlessly. Let's imagine the following. You have started trading and placing all the signals from our channel. You correctly choose the amount to bet and trade. Then you set stop losses. The signals start to give profit, but suddenly one forecast doesn't come true and the price moves towards liquidation. Then you consulted with us in our group and made a decision to average the trade. So, the trade is average, but the price stubbornly moves towards a loss. In such a case, each person will tend to further average trades, since we have already spent one averaging an entry. Currently, this is a danger to fall into this funnel. So, when you start endlessly averaging one trade, and finally it often happens that you lower your entire deposit into it. You feel a loss and regret the money spent for a particular contract when you have to average the trade several times. Therefore, you try to pull it out. Our specialists tell you in the chat that you should not average it further and it's better to count the terms with loss and move on. But you no longer listen and think with emotions. So, you need to close trades, turn off your laptop and come to terms with loss when you start thinking with emotions. So, try to track this moment when you stop thinking that you had and make a decision based on emotions. Then it's better to close the trades and come to terms with the loss once you have called such moment. Never cross the line. Sometimes a cold mind and analysis suggest you to continue averaging. but it's extremely important to realize where the mind of emotions tell it. You never need to listen to emotions. Be sure to note that averaging trades is a risky business, so treat this carefully. The following case is one of the most common ones, is when all our group signals may start to provide a loss at some point. For example, loss at the first day and loss on the second day, and finally your deposit has already decreased. Then loss at the third day. Then you continue waiting for positive dynamics, and suddenly at the fourth day the signals started giving income. Great! At such a moment, newcomers often wish to increase the entry amount into the contract. A person is sure that he or she achieved one goal. All the signals before gave a loss, so now the signals will provide an income. That's why I will bet more and take a large leverage, instead of betting just 5%. All this ends with a drain on the deposit in 99% of cases. Our signal passing statistics has been carried out for a long time, for at least a few months. This means that we will lose even more and you will be controlled by the emotions again. If you increase the amount and the next signal will provide a negative result, but most likely you will be quickly liquidated from the market if you take a large leverage. Another case. This time all the trades seem to provide a positive result. The first trade provides 20% income, the second one provides 50% income, and the third trade provides 300%. Yes, my dear friends, this often happens to us. Nevertheless, it is extremely important to remain calm even in such a case, because there still remains the risk that transactions which have brought such a profit today would bring the same losses the next day. Each person will have certain thoughts. For example, to bet the wild deposit amount, to immediately bet $1,000 and get 300% the same day, and then continue trading. So the all work turns into a lottery. You start betting more in your trades and take large leverage, and finally, you get both multiple emotions and a risk to lose the all deposit. Rather often emotions may start to control your mind. Therefore, to avoid this, it is important to remain calm, have cold mind, and act with discipline. It is important to be disciplined in trading as well, so track all your emotions, and once they start to control you, immediately close your laptop, drink a tea, take a walk, and cool down. You need to approach work with a cold mind only. Losing streak will definitely be replaced with the lucky one. Income of 0.5% to 3% per day is that average one, and it's risky to try to overcome this figure. If it could be possible to earn 300% per day on futures, everyone would already become millionaires. Please note one more rule. Once you are controlled by emotions, close your laptop and leave because of work. That's all, dear friends. I have analyzed the main material on this topic. This information mentioned above is just the basic, which needs to be improved and supplemented. I try to speak in simple words. I hope you have learned your lessons and remembered our simple trading rules. Now I will give you some more advice. Trading is a difficult craft, but it's possible to learn all and become a real professional. So treat it like a job, disciplined and attentive. Do not try to overcome the locomotive. Gain an experience consistently and accurately. Start acting with small amounts and increase deposits once you feel confident in your actions. You may transfer your main deposit to us and we will work with it. We provide a service in the trust management form. Be sure to update your knowledge and consult on any issues with us. We are glad to help all novice traders. We provide just basics knowledge in the current course. Advanced trading level is available within our seminars in the group. So be sure to develop your knowledge and skills together with us, and you will definitely succeed. Now you may start trading on signals from our channel, and I wish you all good luck. Thanks for your attention.